Hi, my name is Hannah, and today we will interview Pierre. Pierre is the managing director of a Singapore based boutique financial advisory firm. Originally from France, he has spent the last 16 years advising on transactions across the world. Pierre teams help companies in different stages of growth by providing insightful advisory services to the C-suite and impactful capital raising efforts. He is both sector and geographic agnostic. Today he gives us his view on key trends as we emerge into a post-pandemic world.
This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HCJ.tax. And with that, we're live. Good evening, Pierre. How are you today?
Very good, Dan.
Fantastic. And for those who are listening or who are watching on YouTube, please, could you introduce yourself?
Sure. And again, thank you for the invitation, Darren. It's a pleasure. So my name is Pierre Fadul. I'm the managing director of Square Associates. We're a boutique consultancy based in Singapore, and we specialize basically in two things: strategic advisory and financial advisory. So basically, our clients are medium to large size companies seeking advisory services, whether it's capital raising, M&A, or strategic advisory. So that's what we do.
Fantastic. So I guess you are definitely a guy to talk to, given what we're all going through. So two questions, like how has it been for you, and what trends do you think that international investors should be paying attention to?
Sure. I mean, definitely it's an understatement to say that what we're going through is unprecedented. So we deal predominantly with private markets. So our role is basically to advise companies on their capital raising efforts, on their expansion efforts. And all of this, of course, has been stalled due to the crisis. So we've had a period of lull in activity with regards to investor activity, investors deploying capital in Asia and abroad. The encouraging thing to say on this point is that it has not completely stopped. It has slowed down, but it did not completely stop. And the other encouraging factor, which makes me positive about the future, is that during this period, since February till now, there's been more and more capital being raised for private equity funds and in private markets, which leads me to believe that once things return to a certain semblance of normalcy, we're going to see more and more capital being deployed. As per the latest figures, the dry powder in private equity funds are north of $1.7 trillion. So, and that's continuing to build up. So there's a wall of money that is waiting to be invested. But of course, in the circumstances will be different. The valuation will be different. Quite a few things will be different.
Wow, that's an unimaginable number, 1.7 trillion. Wow. Now, in terms of the trends and the factors that we see going on in the markets in which you play, and correct me if I'm wrong, you're focused on Asia or you are international beyond that?
So predominantly, a good chunk of our work is in Asia. We do have partners in Europe and in Africa.
Okay.
We advise the outward flow of capital into Asia and the outward flow from Asia to the rest of the world in terms of capital flow. So we're exposed to both.
Okay. All right. In terms of inbound into Asia or deployment within Asia, what are the key trends you see going on?
So clearly, there is a certain reshuffling of sector priority and sector preference among investors. So everything that is related to, of course, travel, tourism, hospitality, and real estate in general has taken a peg down in terms of the ranking of priority. That being said, there is still interest, but it's at definitely marked down valuations. So we've had ourselves several discussions with investors looking into acquiring Asian assets, but they're no more looking at anything close to fair valuation. It has to be discounted valuation. We also were advising several Asian investors, North Asian investors, to acquire assets in Europe because they're seeing what's happening now as an opportunity to acquire solid assets at fire sale prices. Now, on some occasions, the seller is motivated to bring down the price, but on other occasions where the seller is solid and has a strong balance sheet, they're not under any compulsion to sell at discounted prices. So the dynamic is still there. There's still interest, but the conditions have completely changed with regards to sector ranking in terms of investor preference and where the valuation stands for those assets. We've also seen clearly an acceleration of the trends towards technology migration. So anything that was related to a slow transition into a higher use of technology has been accelerated due to this crisis. And of course, I'm not just talking from the work from home and video conferencing, but a whole bunch of other things. A lot of business services now are being provided electronically. So there are quite a few trends that have been accelerated thanks to this crisis.
So, okay, so yeah, definitely the obvious ones, anything technology related, but I assume pharmaceuticals, biotech, health and wellness as well. Is that an interesting sector or not so much?
Definitely, definitely. Well, however, and we're quite involved in that sector as well.
Okay.
We advise a few biotech and pharma companies here in Asia. There is a gap in the market in Asia with regards to life science investments in particular. So you do have several healthcare funds so venture capital and private equity funds that invest into healthcare. However, it's a very specific area within healthcare, and that's the area that does not necessarily develop drugs and medication. It's more the medical device, the digital tech sub-segment of healthcare. So we're still lacking a very strong presence of venture capital institutional investors investing in that segment in healthcare. We've experienced it ourselves. That's not necessarily the case in the US and Europe, where you have plenty of those VC funds that are very well equipped to analyze those opportunities. But Asia, 51% of the world population lives within the 7-hour flight radius from Singapore, and 25% of the world GDP and counting is being produced here. And still, we don't have a large enough institutional investor base to invest in life science. So that's still lacking.
That's definitely an opportunity then. What about in terms of geographies like the Philippines and Indonesia, these commodity-driven economies? How do you see them faring in, let's say, obviously not the short term, but in the medium to long term?
Yeah, so of course, this type of crisis exposes a lot of the over dependencies on certain areas. So Philippines highly dependent on certain services, and Indonesia highly dependent on certain commodities. This has been challenged with the virus and the price of commodities dropping down, at least a large part of the commodity spectrum, not precious metal. So with that brings a whole set of challenge for those economies to diversify themselves and increase their revenue streams, basically. Over the long term, I'm still positive on Asia. I'm still positive on Philippines and Indonesia, but we have to go through a very painful period of adjustment for those economies to try and sort out new sectors to expand. Yeah.
And perhaps now, that presents itself as a potential opportunity, because as to your previous point, that prices may be at the lower end of the scale as valuations fall. It may be a buying opportunity for those who may be so inclined, potentially.
Yes, yeah, absolutely, absolutely. So the opportunities are there. There are plenty of them. Actually, even during the height of the crisis in the second quarter of this year, we were advising on a tourism-related acquisition, actually, from a North Asian company into a Singaporean startup. Okay, at the end, it didn't go through. The terms were a bit too aggressive, but that goes to show that there's still interest in those sectors, even the ones that are the most hardly hit. But again, it's at very demanding conditions. So the investee needs to bear that in mind, and not all of them are willing to go through that for different reasons. So in general, there are opportunities, and it's actually in this environment that you stand to, historically, you stand to do outsized returns. It's
Mm,
only when you buy things that nobody wants, or that are very low in popularity, that you stand
mm,
to make the good bargains. But of course, you need to find them. You need to make sure that
mm.
you're buying something that is sane, but is going through a tough period, rather than something that was already challenged before the crisis, and the crisis just exposed that even more.
Mm. What is your sense intuitively in terms of the future, in terms of how we do work? Right now, obviously, work from home is the default. Do you see that at some point we will return to 2019 and we go to the office every day? Or do you think this work from home culture will be perhaps permanent? What do you think?
Yeah, no, definitely. I think it takes a crisis like this to actually test out on a large scale what has been tested at a smaller scale. So a lot of companies already had certain contingency plans and business recovery and business continuity processes, which they test a few days a year. And now they got the opportunity of actually running it over several months. And you've had several companies already announcing, like Schroders, a large UK-based asset management company with global operation. If I'm not mistaken, they've announced relatively recently that they'll be giving their staff indefinite work from home status.
Mhm.
And that's we're expecting quite a few other companies to follow suit, and many large companies saying to their staff that you're going to be working from home up until 2021 easy. So I think this will be difficult to let go this status, because it brings many advantages. It saves, first of all, it saves cost, and whenever it saves cost, that's a strong argument for
Yeah.
corporation. And also, it's a better balance for the employee in most cases. It's a better balance for the employee. So if it's a win-win, chances are that we're going to live with that vestige, with that heritage from this crisis. Now, of course, this has several implications. It has implications on several levels. First of all, and the most immediate one, is office space and
Mm,
commercial space will not be as desirable as before, and that's already being reflected right now. So, in a lot of the major cities in London, New York, etc., the suburbs real estate is actually faring relatively well, whereas the core and central locations are doing badly. So that's on the residential side. On the commercial side as well, there's less and less demand for office space. Chances are we're going to continue like that. And of course, all the tech-savvy, tech-strong companies are booming. So we're advising a few fintech companies that service SMEs and companies that uh, benefit from low-cost services, low-cost professional services.
mhm.
And they're doing fantastically well, because they are really able to help those companies that um, they're not going, the staff are not going to the office anymore, and therefore there's no paper, there's no printing, there's none of that is needed anymore. So quite a few of these things will stay with us, and hopefully for the better.
Yeah. So, I mean, and just to take it a bit further, obviously commercial real estate, but potentially residential, because, hey, I don't need to live in Manhattan anymore. Maybe I could be Connecticut, somewhere further out. Uh, so London is reporting what it's reporting. New York is in the headlines. Everyone knows what's going on there. And there was recently, I think a few days ago, something in the UK press about Singapore. So do you think that Singapore may be impacted by that trend? You know, do I really need to be in Asia? Can I service them from the UK?
Absolutely. I totally think that that's going to be the case. I think that the need to be physically present in a location is going to be less and less important.
Mhm.
Therefore, that has an impact on prices of real estate, where location was everything. Nowadays, we're moving to a more location independent type of employment for most staff. So that's going to impact. Singapore is going to impact all those highly congested cities. And I
Yeah.
don't think also a lot of those social distancing measures are going to be loosened up before, very soon. We're going to stay with those measures, the masks, the social distancing, not being in crowded spaces. That's going to stay for a while. Therefore, the need to be in the center is less and less desirable.
Mm. All right, so obviously that has implications for the development and the evolution of a jurisdiction, which is just a city-state like Singapore, and obviously Hong Kong. But Hong Kong has additional complications as well. Uh, Speaking of which, what do you think is the outlook for Hong Kong? I mean, I've spoken to people who they say, well, you know, the media is exaggerating it a bit. Hong Kong is solid and will continue. And then obviously people who say the opposite. What are your thoughts?
I mean,
Mm.
Asia, and when I say Asia, it's that 7-hour radius flight from
Yeah.
Singapore, which covers 51% of the world population, uh, can handle more than one financial center. So there is a mass here that can handle more than one financial center, and Hong Kong definitely has long been a very important one, along with Singapore. They've always the rivalry, the friendly rivalry has always been there.
Mhm.
Clearly, what the changes that are happening in Hong Kong now stand to benefit to a certain extent Singapore. Um, I still think that Hong Kong will have its place as a financial center, but I think it's more and more geared towards North Asia rather than a Pan-Asian financial center. And Singapore, which has always been the Southeast Asian financial center, might increase its importance in that geographic role of a financial center. But I think both will stay there. And yeah, I mean, but Hong Kong is definitely going through some investor challenging measures currently.
Right. And I want to take you a bit closer to home. I know Singapore is your home, but back to Europe. What are your thoughts on what's going on, you know, Brexit and the uncertainty on the back of that? We saw how Europe's response to this situation was less than coherent and cohesive, and a lot of nationalism still reared its head. What is your outlook for the EU?
Yeah, so I mean, if we are to put this into a larger context, ever since the global financial crisis of 2008, we've had a move towards more and more on the political spectrum.
Yeah.
We've had more and more moves towards the more extreme parties and less the central parties, and we've seen that with the political gains made in Hungary and Poland, Italy, and other parts of Europe, and of course the Brexit vote in 2016.
Mhm.
So, and you can always tie this with a slower economic growth, with less wealth being, rather the wealth created is not being equally distributed along all the stratas of society. That has been historically linked with these kind of political changes. That being said, Europe still has quite a few strengths. The strength of Europe is the size, the development of its economies, and also sometimes Europe has these sometimes surprising features to it, and you're starting to see some tech centers being starting to pop up all over Europe. Like Paris is starting to become one. Parts of Central and Eastern Europe are starting to become really tech savvy, and they benefit from low cost, highly skilled workers in those demographies there, in those geographies. So there are certain bright spots, but clearly Europe is going through challenging times economically, politically, and a lot of questions are being asked about the European Union. And we've always had that dichotomy. It's a financial monetary
Yeah.
union, but not a political union. And fiscally also, it's not fiscally managed in a consolidated way. So there's a lot of work for everything to be harmonized, if that is an objective in the first place. And this is yet to be determined by the populations of Europe. Is this something that they want? So, of course, existential crisis for Europe, relatively managed relatively well so far, but let's see how long it can stay like that.
What's your prediction if you had to give one? Mhm.
Uh, difficult, because all these countries they have different aspirations, different
Yeah.
status. Um, I mean, Greece, it was close to the Greek episode in 2010 and subsequent episodes were potential tests for a country being taken out of the European Union. That didn't happen. But then Greece is of a size that can be managed. The real the real test will be if Italy is in really bad situation, what's going to happen. So, and Italy, third largest stock of debt worldwide at the government level, third largest public debt in the world. So, it could be an Achilles heel and a test for Europe. And of course, all these political parties popping up, unconventional ones, they have different views on Europe. So if more and more of these parties continue to win, then they might be questioned. The Brexit vote might be extended to all of the other countries in Europe. It's very difficult to predict on this one. I still think there is a core of countries in Europe that will have an interest in having free trade agreements and free movement of capital and labor. Maybe we'll have 2 or 3 sub-European unions, or maybe we'll stick with the large one. Very, very difficult to predict on this one.
And what about the UK? What do you think would happen post hard Brexit? I guess because that's what they're heading to. What are your thoughts?
Again, this is a topic that we've debated a lot. So we have partners
Sure.
in the UK, and we have clients in Europe as well in general. So I think, and hopefully this will not come too controversial, but I think that the Brexit won't be as bad as the worst case scenarios that were out there. And of course, it won't be as good as what has been promised. I think Brexit, from a pure economic point of view, and I can say that because that's my expertise, it will have a negative impact, but I don't think it will be as substantial as one might fear. London and the UK in general have always had very appealing features from an international investor point of view. I think they'll still remain there. Clearly, it will have a dent, but it's a negative one. But I don't think it's one that will change the whole landscape of the UK.
Okay, that's fair enough. And I guess that is the right way to look at it, because when you look at scenarios like this, it's never as bad as people expect. It's never as good. It's always some middle way, right? Okay.
Absolutely, yeah, absolutely. I mean, the UK has a very strong economy on its own, and the fact that they're not able to access 450 million consumers and their products being, basically taxed or at a more expensive price definitely will have an impact. There's no two ways about it. But again, it won't be as bad as we think. That's my opinion.
Okay. And Africa, what are your thoughts on Africa?
The eternal promise. The eternal promise. Really, we have quite a bit of transactions and clients that we handle in Africa. It's the eternal promise because the continent has such a strong potential. Those 54 countries will see the highest population growth worldwide. So Africa is going to double its population in the next 25 to 30 years. And that's not gonna be matched in any other geography worldwide. And of course, that has tremendous implications from an investment point of view. And not only that, the continent is rich in resources. It has a very good, strongly educated elite. But of course, it has all the problems of any other emerging markets, the endemic one, which are low efficiency, corruption, red tape, etc., etc. Again, we were hoping that the past few years would be more fruitful with regards to the economic development of Africa. We've had the emergence of a new breed of leaders in Africa. A lot of them, truly working on a clean platform, anti-corruption platform, which is always very welcome there. However, it seems to be the case that the administration, the archaic administration, is so strong that it's impeding a bit the progress and the development that are being made in those areas. Still positive long term, but I think that long term has been pushed a bit further away in the future, but still positive.
When you said the eternal promise, it reminds me of how some observers would categorize Indonesia and Brazil. The potential is there, but.
I mean, the first time I started looking at companies in Brazil, Brazil was similar to maybe Kenya is now. But fast forward 15, 20 years later, of course, now Brazil is going through a whole bunch of other stuff. But let's not forget the country was investment grade up until a few years ago. It had very good macro figures.
Mm-hmm.
Of course, it was the height of the bull market, so maybe it was bull market in commodities, FX, etc. So maybe it was all the errors were masked by this rising tide. And now that the tide has receded, it exposes all the weaknesses and the reforms that were never implemented, the reforms of diversifying the economy and taking out some of the rigidities that the country has. But I think everyone can agree that Brazil, also similar to Russia, which is another geography that I know quite well,
Mm-hmm.
we've had progress made in 15, 20 years. That progress has been 3 steps forward, 2 steps backwards, but the result is that we have 1 step forward at the end of all of that volatility.
Right.
So I'm still positive on Africa. And, you know, if we are to look at the long-term forecast of population growth,
Mm-hmm.
Africa stands to have 5 out of the 10 largest cities in the world in 2100, which is a long time from now.
Mm-hmm.
But you have, you know, Lagos, Kinshasa, or Dar es Salaam, all these cities that will be mega cities. And again, we're talking about mega cities that have populations over 15 million each.
Wow.
So these are implications that are quite significant from an investment point of view and how you can position yourself to make outside returns.
But you know, let's take a look at that a bit and connect that to a point that you raised earlier about the increasing digitalization and remote work. Would the rate of urbanization continue, bearing in mind what's happening right now?
Excellent question. Actually, all of these forecasts might have typical forecasts. I mean, especially forecasts for 70, 80 years ahead. So yeah, all these forecasts might change. But the advantage of emerging countries and a lot of those nations in Africa are still under the emerging nation status. The advantage that they have is that they stand sometimes to leapfrog certain intermediary status of technology. So we had a very clear example of that in India in the 1990s when the penetration of landlines in India really stalled around 40% in the mid-90s, just because the country is so large and it was relatively slow in adapting their infrastructure. But mobile penetration zoomed all the way and passed the 40% mark of landline, just because it was so slow in adapting to the previous technology, it was able to really leapfrog that and go straight to mobile. So we might have the same situation in Africa. So we definitely see that in certain areas of financial services where, you know, a large part of the population there is unbanked. And instead of waiting to go through the traditional route of having a bank account and then savings account, all that sort of stuff, they're going straight into the fintech platforms and having microloans being delivered to them via SMS on their mobile phone. So they're going really straight to the more advanced stuff. So they might take advantage of that potential trend there. But everything takes time, and let's hope it goes that way.
Okay. And you mentioned India because as the rate of growth slows down in China and they face other challenges, all eyes are in India. What are your thoughts on India?
Again, very promising economy, and it delivers sometimes. The issue, we have certain structural issues in India, the permanent deficit, the public deficit, the current account deficit, all these weigh really heavily on the nation, on its finances. And of course, now the friction that's happening with China is actually quite worrying. If there is one bigger risk out there, apart from COVID, is an intense conflict or standoff between China and India. I mean, these are the two heavyweights in Asia, and if they sneeze, we're all going to catch a cold here. So that's going to be even worse than COVID, in my opinion. So let's hope this doesn't happen. But of course, India has always had the strong potential marred by, or rather slowed down by, administration, the weight of the administration, the inefficiency of certain regulations and tax regimes that are really complicated and outdated. So, and the infrastructure is, of course, still deficient to a large extent. But then again, in the private market space, it's one of the most exciting destinations for investors. So I'm sure we've all seen the deals that have been signed up between Facebook and Geo and all the other social social platforms that have these financial services angle to them as well as the media angle to them. And so Flipkart, another very good success story out of there, thanks to the strength of the consumer base there. So you still have great transactions and investment to be made in India within that context, a difficult investment context. So imagine if that investment context is more favorable, what would happen to those deals? They'll be even more appealing. Yeah, these are the challenges of those emerging nations. Unfortunately, we have to go through these volatilities here and there.
And last but not least, the North American elections in the U.S. Well, I mean, not just the political climate, but what the economy is going through as well. What are your thoughts on that?
Many thoughts on that point. Many thoughts.
Yeah.
I mean, if Trump wins, from pure economic policy point of view, we at least know what's going to happen. It's a continuation of the past 4 years, maybe taken further. If Biden wins, then there's a whole phase of unraveling a lot of the previous measures and putting together new measures. If we take a step back and look at the U.S., and in a larger context, of course, leading economy in the world, leading technology innovator in the world in spite of everything that's happening. I mean, I still think that we're going to have fantastic companies out of there, but this is not helped by all these political issues that they have. And at a certain point, the country needs to face some crucial issues and crucial economic choices, because that deficit cannot continue like that. Certain things that are afforded in other developed countries are not afforded in the US. How do you go about it by affording that? So there's a lot of issues that need to be dealt at a nationwide level also.
Why can't the deficit continue as is if it's the world's reserve currency and the printing press?
I mean, it can, of course, but it's not that it can, of course, because it's the world currency, reserve currency of the world, then of course it can continue printing. But we have to factor in the reaction of other countries in the face of that continuous printing and the efforts made by China and other areas in the world trying to put together an alternative currency system there. So at some point, the dollar might be challenged. I don't think this is something unreasonable to expect. Of course, all commodities are denominated in US dollar. It's still the reserve currency of the world, so that they can still print for a while.
Great. Pierre, as expected, you have been a tour de force. You have taken us all through the world, and you've given us a lot of food for thought. Pierre, thank you very much for your time.
Thank you, Derren. Pleasure.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.